Would you say it's fair on the why to say half of the why is because of people trying to improve gold and trying to improve the function of money? Could we also say half of the why is because of human greed and stupidity, and that the flaws in the system allow people to exploit it? And getting to what we're ultimately heading to, which is talking about Bitcoin, is that it not only improves on the technical issues, but it also protects against the greed and stupidity a bit more.
Yeah, I think that's a fair description. I think, the challenge is that most of these solutions that made money easier to use were centralizing.
Mm-hmm.
And with centralization comes corruption and basically more ability to play games. And so what I think is relevant about Bitcoin as, the first time where hard asset, bare asset money can move at the speed of telecommunications globally. What that does, and it's one of the first technologies in money that can improve it, that's not centralizing, that's arguably decentralizing. And that's what makes it different than, say, the past 200 years of monetary innovations. And I think the challenge, like what we talked about before, the concept of technological determinism, which is that, if we were to rerun humanity multiple times, would this be like a weird anomaly that happened, or would it usually end up like this? And my argument is it would normally end up like this, like the set of technological capabilities combined with incentive structures and human greed makes it really hard to run a money system when transactions can move at the speed of light, but physical settlements of hard money can't. So this century and a half window is a weird window to navigate, but it's a window that would come up over and over again for any civilization that reaches this type of complexity. And what's interesting about Bitcoin is it's potentially the closing of that era. If it's successful in the longer run and at scale, then it's the first time where digital settlements are just as fast as digital transactions, basically, and that can de-abstract, simplify, and decentralize the money system.
One of the interesting things about Bitcoin is that with all these other forms of money, it's the greed and the stupidity that has allowed people to exploit the money. And I know we're going to get into it later when we just talk about shitcoins, but as people haven't been able to exploit Bitcoin, they've tried, but they haven't been able to. Part of the way of exploiting it has actually been to clone it, to try these shitcoins. That's how the greed has continued, and it's a slightly different way of exploiting it. It's almost exploiting the breakthrough in the technology and the marketing behind it rather than the technology itself.
Yeah, that's a good way of putting it. And with precious metals, the thing there is that each one has a certain degree of scarcity, and then there's only a certain number of them. Each one is an atomic element, so it's not like you can just make tons more precious metals. The challenge from Bitcoin, and one of the things that the critics have pointed out from the beginning, is that no one stops you from making a duplication of it. There's no limit to how many different cryptocurrencies can exist, and so they rely on network effects, depth of liquidity, their own unique properties to establish such a degree of dominance that near identical new entrants are not really going to have a chance, right? And so this is kind of this bootstrapping period is this phase where we see if the technology is strong enough to resist all those types of challengers and establish a certain degree of network effect and liquidity and dominance and all that in order to become truly scarce and gold-like. And again, I would defer to technological determinism in the sense that I think anytime this type of technology gets developed, if we were to rerun these past 15 years multiple times, I think you get an explosion of shitcoins like every time. I think we were lucky that the first one was good. I mean, I can imagine worlds where the first one was not good and like it had some sort of big flaw, or Satoshi's a scammer. He's smart but not ethical. And you can imagine different scenarios where maybe the second or maybe the first one's not the one that achieved critical mass. But we were in one where it is. But I think it's natural that people are going to experiment. I think we have to try all the wrong answers to prove why the right answers are they are. So we can theory craft what the right answers are. But I think that in practice, people have to learn through iteration. So I think it's if you were to rerun this, I think you'd always have attempts at Turing complete blockchains. I think you'd always have attempts at sacrificing decentralization for more throughput. I think those are the two kind of big variables that would keep getting explored, as well as can you eliminate the energy and do proof of stake or other types of governance. Um, and my analysis and the analysis of many others is that Bitcoin is near perfect as it is, and we're lucky that the first one was well designed and ethically distributed and launched in this fair way, and that the first one happens to have really maximized these decentralization. So I think this is a process that Bitcoin has to go through to prove itself. And it's one of the when I first discovered Bitcoin over a decade ago, that was my initial concern all along. That's my view. The biggest risk is not is it, I was always interested in it, but my main thing was I don't know if this is going to be able to survive the sheer number of dilution attempts. And when you looked at it in 2010, 2011, 2012, even a few years after that, it's hard to make that determination. But several years ago is when I started to conclude that, yes, I do think that Bitcoin is robust enough and well designed enough, and that it's achieved a certain degree of critical mass that has a very good runway ahead against all these dilution attempts.
Okay, well, listen, before we get into Bitcoin itself, we do want to cover a couple of things for there. We want to talk about the financialization of everything. And I know now, I even feel this here in the UK. I don't save anymore. I used to save, but when you start hitting 10, 11% inflation, it incentivizes you to spend as well. I mean, I look for alternative investments, but I am incentivized to spend as well. How big a problem is this?
It took me a little while to fully understand the argument about money and time preference and saving, because my anecdotal experience was that when I was young, I was a teenager. I got interested in equities pretty early, and so I always my um, like opportunity cost was always mentally stocks. It was never cash. So even though cash was devaluing, I was lucky to have the dollar, but I still, I viewed the dollar as inflating away. But I would kind of mentally price things in terms of like owning stocks for 20, 30 years. Um, but when you travel the world, most markets don't have very good equity markets. The United States stock market's kind of special in that regard. Most other countries, people are more likely to save in real estate. That is there, for ones that are able to do that. But then, of course, the challenge there is that real estate's very illiquid. And so, for example, when I talk to my friends and family in Egypt, it's a very different environment because the Egyptian stock market is not nearly as robust and long-term successful as the United States stock market. And so your choices are mainly hold in something that gets inflated away, invest it in illiquid real estate, which many do, and then there's like you have almost like ghost cities sometimes because there's overbuilding and buying and holding empty properties for lack of what else are you going to do with it? With the idea that Egypt's had very good population growth, so eventually it'll be filled. Of course, there's risk of malinvestment or risk of derailment, or they can do things to try to get external monies like physical dollars on the black market, Bitcoin, stable coins, whatever the case may be. Gold is fairly popular, and so of course the problem with all those is that they're prone to price swings, they're liquid, they're less efficient, and so it's actually, I would argue, it's very damaging not to have a ubiquitous, standard, liquid, like appreciating savings unit in a country. It's very hard for countries to build capital. And I think we talked about this last time. I think one way to describe that is to point out how few countries have officially transitioned from developing countries to developed countries. So if you look at an index like MSCI, or if you look at FTSE, the FTSE, they rank countries based on certain metrics. Are they developed or developing? And there's very, very, very few countries that transition from developing to developed. A handful of small countries in Asia have done it, and that's about it. There's this whole 50-year fiat currency era has had very little transition from developing to developed countries. So I would argue that it's actually quite challenging. It's the exception to the rule that a country is able to accumulate enough of its own capital in this type of environment to get escape velocity. I think that's how I think of it as one of the biggest problems with the system.